Happy Monday, happy Monday. It is 9 a.m. Central Time right now, and I would imagine some people are going to work or some people are at work right now. Enjoy your day. Anyways, you should be able to hear me okay. I think the speaker on my phone is starting to kind of go out on me a little bit, so I think this should be listenable. If not, y'all will let me know, I'm sure. But you know what? I've had this iPhone since May of 2021, and it's almost 5 years later, and the thing is still working. I was so skeptical for the longest time about iPhones. I know the iPhone came out, what, 2007, 2009, something like that. And it took until 2021 for me to finally get one. And I initially thought it was a ripoff. Oh, they're going to throttle it and make it where you got to get a new one every year, every 2 years. I'm really pleasantly surprised this has lasted me 5 years. I never thought that. And I guess the trick with Apple, a lot of people say, is once your phone gets above 3 years old, you got to really stop with the software updates, because the software updates is like a controlled demolition of your old phone. They'll throttle the speed, they'll throttle all this, that, and the other. I would believe that. But I guess I don't know. I guess if you think about it, Apple, is a huge blue chip stock. They would not still be in business if they were blatantly scamming people, or if the planned obsolescence was year after year, they wouldn't be in business. So I am pleasantly surprised, and I guess I would want to report on that the phone's lasted me 5 years. Anyways, that's not what I want to talk about. I want to talk about the emails I've gotten this morning about silver, the price of silver not going crazy. And, this was to be expected. I remember on Friday night or whatever, when the Iran attack happened, everybody said, oh, silver and gold are going to the moon, oil's going to the moon, everything else, equities are going to crash. Well, you got to understand, I understand why people think this. JP Morgan and some of the big players had clearly exited their short positions last week or the week before. So it looked like the price was going to rise precipitously. However, with everybody thinking it was going to rise, that's what I said to myself. Nah, it's probably going to dump. There's probably going to be profit taking. And so last time I checked, well, we'll say this. Early in the morning, gold was over 5,400, and silver, I think, hit about 96. Right now, at the time of this, gold is probably at a little over 5,300, and silver was hanging around 90. So it kind of pumped and dumped, But at the end of the day, what JP Morgan and these metals desks of these huge players, these huge institutions are doing is they're shaking out speculators. Do you know how many people bought Saturday or Sunday? They bought a bunch of silver expecting to make quick profits, as if silver's something to day trade or swing trade. Y'all are going to get your butts handed to you. This is not what silver is. All you have to do is look at the charts from, the 1970s on to see what happens with silver. It's so volatile. It's going to become less volatile as it becomes more institutionalized for its use in, AI data centers, the war machine, and batteries and stuff like that. But you have to understand, they're not going to let Johnny-come-latelys make money that quickly. You know what I mean? They're just not. And so you got to understand, silver, it's a long game sort of thing. Gold truly is the safe haven. As JP Morgan once said, gold is money, everything else is credit. And of course, that's a soundbite, right? That's an ancient soundbite from a couple hundred years ago. And what he really meant, silver is money too. Silver is, what do they say, the money of gentlemen. Gold is the money of kings and emperors and stuff like that. It's always good to own both. And so gold hasn't crashed. Gold is still up, right? Silver's down a little bit. But you got to understand, people hemming and hawing about it crashing. It didn't crash, guys. It closed last week at like a hair under 94, and now it's 90. That's not a crash, right? It pumped literally over the past 6 months. It pumped from $30 up to $121, down to $64, up to $96. Now we're at 90. This is the volatility you have to expect. And I think long range, JP Morgan is longing silver. I really do think they are. So you can expect it over time to go back over 100. But I get these angry emails about people going, oh, soft-spoken shaman, you're talking this about silver. Guys, I never said you were going to make money immediately. I said it's a good play to hold, you know? And here's the thing. Even if you did buy in October, November, where it was, $50, $60, $70, you're up. What do you care? I mean, for me, my dollar cost average for silver is I bought between $10 and $22. So I couldn't care less what the price does. I'm up and I don't plan on liquidating. But for people who are just getting into it, you have to understand you're not going to make a killing. You have to understand that. Look, zoom out and look at the chart. The rise over the past 6 months is unprecedented since the past fall. So you got to understand, if you're going to draw profit, I mean, let's say silver does go up to 150 or 200 or 300, then yes, you're in the black just like everybody else. You're doing great. But you got to wait for these profits to transpire. And just remember, if you're in the game right now, what you have, maybe it's unrealized gains or unrealized losses. You haven't checked out yet. You haven't sold. So who cares? And everybody knows, don't put it into the market if you can't afford to let it sit for a while. I've said before, I swing trade equities. I swing trade stocks. That's what I do with stocks. I'm not a long holder with stocks. I am a long holder with metals. And I say this not to sway anybody's position. I say this just to educate people and inform them on what I do, because I happen to be doing pretty well in my life. It doesn't mean you have to do what I do, but that's my strategy. There are some stocks that I hold long, but not a lot of them. A lot of them I exit my position in weeks or months. With silver or gold, I can tell you the last time I sold gold, the last time, and this is the honest to God's truth, the last time I sold gold for Federal Reserve notes was in 2011 or 2012 during the last bubble when gold got up to $2,000. And I had bought that gold at, I think, $1,000. And so I exited my position. And then later on, I bought back in. I bought back in when gold was at 1,200. And now gold's at, over 5,300. Who cares? But I've never sold silver in my life other than a little bit of profit taking over this last pump. But the vast majority I still hold. And because I see the upside potential. But in order to get to that upside, you have to be able to get through the volatility. And, it's fits and starts, it's peaks and valleys, it's booms and busts, pumps and dumps. And every single time silver dumps, it's the same old story. Haters going, oh, you bag holder, blah, 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 you're screwed. But then what happens? A couple days, a week, 2 weeks later, it's back up. So, it is frenetic. It is a manic depressive sort of thing. If you're into silver, you have to understand this. If you're into gold, you just buy gold, you park it, and you're not looking to sell. And if you do sell gold, it's, years, decades down the line where you've realized quite a lot of gains, or it's, for your descendants. Silver, to me, has been an avenue for wealth in the sense that you can wait for it to have a run up and then check out and then buy other costly assets like land or other commodities like cattle or whatnot. That's what it's for. But for the average idiot who's speculating, if you're a speculator and you're not an insider, you pretty much guaranteed are a dummy, and you will get your butt handed to you by the market. But it's good that should happen. It should happen to everybody once at least, that they get their butts handed to them, because it teaches you that when you're in the market, whether you're in equities or precious metals or commodities or futures or whatever, you are riding a mechanical bull. And you have to understand this, because don't get in the market unless you're okay with realized losses every once in a while. You lick your wounds and get back in and understand you made a mistake or whatever. But, like the email I got today from somebody who was bitching and complaining, they bought in when silver was 70 or 72 bucks. And now silver's at like 89 or 90. What are you complaining about, dude? You're still up. You didn't buy in at lows, from, 5 years ago or 20 years ago, but you're still up, dude. Why are you chomping at the bit to, realize those gains? Just wait. You wait until the summer. I'm not going to make any predictions, but I would imagine over the summer, we're gonna be well over 100, you know? I mean, silver could be 120, 130, 140, 150, who knows? So just wait, dude. You know, you have to understand when you're dealing with metals, deferred gratification is a must, especially if you're stacking them with the desire to eventually sell them and then put that cash into something else. It's not going to be overnight. And I didn't ask this gentleman his age, but I would imagine he's probably a Zoomer. He's probably anywhere from, 18 to 25 and wondering, why can't I not has money right now? Why can't I more not has money right now? Well, it doesn't work that way, brother. I mean, some people, they get lucky, with Bitcoin folks and, a huge run up over the years, but even that took years, right? So if the digital beans took years to run up, I mean, just expect that to happen with anything else. You're not losing, buddy. You're not losing. You're not down. You're up. This is what silver does. You have to understand that. And you have to understand the manipulation laid in within the silver market, especially with JP Morgan moving their metals desk to Singapore. So you see the effery overnight when the COMEX opens on Sunday night. And then when China opens up, the Shanghai Futures Exchange opens up, and then blah, 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 blah. There's all this effery going on. And you have to be okay with that, dude. You're in a world casino that's not run by you. And you're just hoping you make it out alive by the skin of your teeth, and you do better than how you did when you parked your debt notes in that exchange. And if you're up, I don't understand why you're complaining. So you have the right to bitch and complain and squeak and squaw. Everybody does. You also have the right to just be chill and be silent, and wait for the market to do its thing. If you can't take a little bit of volatility with silver and gold, then you can't. I mean, the boomers have a thicker skin than you with just buying index funds and letting them sit for decades. So think about it. Anyways, just a response to the dum-dum. Like I said, you can go to the pin message or the pin comment, and join the channel and learn more. Check out my books, payhip.com/The Soft-Spoken Shaman. That's the way to do it. I mean, if you're a baby, don't get in the market. If you're a full-grown adult and you're ready for the volatility, you're ready for the realities of life, that you don't always win, you don't always lose, you don't know when it's going to happen, when it's not going to happen, then sit on the sidelines. It's as simple as